The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we start the week off rather sad. Arnold Palmer passed away yesterday, the great golfer. And I was fortunate to meet Arnie and his wife Winnie in the 1978. I was up at Lake Tahoe for a huge coin convention, and it was in the afternoon about 3:30, and myself and four of my coin dealer buddies that I had traded for, I still was, at Druxos. We were shooting craps, and Arnold Palmer and his wife Winnie came up to the table to start to shoot craps with us. And, you know, everybody, there was not many people in the casino because it was in the fall. And the weather had not changed to snow yet, but it was still rather nice. Anyway, what happened was we started joking around, and these coin dealers, if you've never been around a coin dealer, they have sense of humors that would rival Robin Williams. Anyway, they had Arnie and his wife laughing so hard, and then we were actually making a little bit of money. And after about an hour and a half, we asked him if he'd like to join us for dinner, and he said he would. And so we went up to this 4-star restaurant at the hotel to have dinner, and we had a wonderful dinner for about 2 hours, and we were picking up the check for him. And of course the maitre d', looked down at us. He said, "You've got to be kidding." And he says, "What do you mean?" He said, "There's no check." He said, "What do you mean?" He said, "That's Arnold Palmer." And anyway, he told us that he and his wife had not paid for a meal in over 30 years. So, well, it wouldn't have been 30 years, but at that time it had been about 20 years. But wherever he went, the main thing about Arnold Palmer, he gave us a autograph. And when Arnold Palmer wrote an autograph, it's not like what you see when these guys walk down where they scratch something really quick, like bye, double X or whatever it is. He would write, "What is your name?" And he always asked the person's name that asked for an autograph. So it said, "To Larry, warmest regards, Arnold Palmer." And when he wrote out the name, very, very slowly, he wrote Arnold Palmer so you could read it. It was really something very, very special. So he'll be missed by a lot of people. But he and, Jack Nicklaus and Tiger Woods were the ones that made golf what it is today. Anyway, let's get on to the markets. Folks, we got a problem in the markets. The first chart that I posted in here today is the chart for, not a chart, it's the graph that we looked at last week showing the interrelationships of Deutsche Bank to the large banks in the world. As you notice, the size of the circle that you see there, those are the ones that are the most susceptible to counterparty risk. And what that means is that if Deutsche Bank did a lot of positions and didn't cover those, by normal methods like they usually should, have margin behind it, and if they didn't do that, this could be absolutely much, much worse than what we had with Lehman Brothers. The stocks of Deutsche Bank and Lehman Brothers look very, very similar. So you've got to be very, very careful. If you're in Deutsche Bank, I wouldn't have a savings account there. I don't think it's going to go under. But Merkel came out and said, we're not going to help the bank. Well, just go back into history and look what happened to us in 2007 and 2008. We had to bring in someone from Goldman Sachs to run our treasury, and I can't remember the guy's name now, son of a gun. We're having a senior moment here. What was his name? I see him standing there. Okay, a little help. Who was the secretary? Hammer and Hank Paulson. Yes, he was the CEO of Goldman Sachs, and he took a job for the Secretary of the Treasurer for about 10% about 5% of what he was making at Goldman Sachs. However, there's a stipulation when someone takes a job in the cabinet. Guess what happened? He gets a tax break on his taxes, which amounted to $270 million. So It was a really good deal. Anyway, he tried his best to keep Goldman Sachs's main competitor, Lehman Brothers, from going bankrupt, but unfortunately he was unable to do it. He did his level best, I'm sure. But once Lehman Brothers went below $19 a share, that told the markets that they had no backing behind anything that they had done. Now, if we take a look at the price of Deutsche Bank here, you'll notice that as of Friday, it was trading around 12.75. We're now trading below 12. We're down another 6% today. We were down 22% last week. These are not good signs, folks. And if you look at the long-term chart on Deutsche Bank, the high on this in 2008 was 114. So we are at it's already given back 90%. Anything below $11 a share, and we're only $1 away. I mean, that's not very much. Below $11 a share breaks it below the 1.618 expansion. And those of you that follow, the numbers of the Fibonacci summation sequence, you know that if we go below that, go past 1.618, that spiral can take you anywhere to 2.618, 3.14, or pi, or all the way out, to any number. So you've got to be very, very careful here. If you're trying to buy Deutsche Bank. I frankly don't see any reason to do that, but it should have some support at 11, because if it doesn't have any support at 11, then it's going to have some serious trouble. The big problem is the interrelationships of all of these banks. We had too big to fail back in 2007 and 2008, but the banks have not changed. They've not done anything any different. We see this in Wells Fargo. We see it in the fact that, J.P. Morgan has paid $40 billion in fines since 2010, $40 billion, and no one has ever spent a day behind bars. Hello, you steal $20 from a 7-Eleven, they'll put you in jail for 5 years. So, these things have to be changed. And we're going to find out what's going to happen, because tonight is the World Series of elections, I guess. I just can't believe, well, I should believe it, but you can see how the news media is trying to draw people for readership. I mean, it's amazing. I imagine their rates for advertising have gone through the roof. I don't know how to follow that stuff, but I can imagine the minutes that are going to be on for Fox and CNN and and the other networks for these debates are going to be good. The problem is that if it's a big flop, maybe it's going to be a big nothing. I frankly don't see how that can possibly be, given that people are so adamant about both candidates. So it will be a very interesting time to see what will happen tonight, and I'm sure it will affect the markets for sure. That is in the major part of this. So we'll see. We're going to talk a little bit about the great thing is this, about the gold market when we get back, because it's getting ready to possibly pop out of here. I looked at this very closely over the weekend and put it in the newsletter to say that these charts look awfully bullish for both gold and silver, and you have to pay attention to them, because they backed off $11 just like we thought it would, and then it's starting to run. So we'll see. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we've had a request to take a look at soybean oil, and as you can see, it has been much stronger than the soybeans themselves. Now, people that trade beans realize that when you're trading soybeans, you're actually trading two products. You're trading the oil, which is 30% of the bean, and the meal, which is 80% of the bean. The problem is that the oil is a very, very large market, of course, as is meal. Meal is basically used for feed and also for making tofu and that kind of stuff. But oil, the cooking oil, and also the soybean oil is also used for paint. It's very large. I mean, it's got so many uses you just can't imagine. But what happens is because of the large number of, the Asian population, over half the planet uses the cooking oil, quite a bit. So if there's a problem in India or China or something with, getting oil, then this is why soybean oil can be way up in the air and the price of meal can be down. And that's known as a spread. In other words, you're long oil and short meal, or long meal and short oil. So those are particular ones that are interesting. We'll have our friend Rich Anderson on this week. He's due to join us. We'll try to have him on tomorrow. Next Monday, I'm going to have a special guest. We're going to have Mika Redding from she is a daughter of one of my students from 35 years ago, and he was an anesthesiologist back in New Jersey, and she went to Indiana University and got interested in trading and stuff, and now she's writing a letter about W.D. Gann. She's she follows the work of Gann and, of course, some of the work that we do, but she really enjoyed the work of Gann. So we'll see what happens, with that. But anyway, that's what we're going to be looking at. So, but oil, as you can see, has had lower tops in here. It's due for a pretty good correction, but we'll see if it is going to be the case or not. So it'll be interesting to see what happens to the oil right here. Let's get to the markets that really are very, very close here, folks. Over the weekend, I did in the newsletter, I worked very diligently on this gold and silver to really look at it, to really see if I could get an idea of what was going on. And you'll notice here that in the long-term weekly chart, we stopped at some major resistance up there at 1394. But the key here, folks, is that this last few weeks here, all we could do is to come down and make a 382 retracement of the May low. That is very, very bullish. And we are now starting to move higher. I said anytime we get above 1360, this thing could really go. That measured move from April to the high we made in May to where we are now takes us to about 1475. So that's a big move. That's over $100 move from here. And given the way these election things are going, you could get that in a matter of a few minutes if something really crazy should happen, and they usually do. So it'll be interesting. You know what's different between, if you looked at some of the old debates that we had, if you look at Kennedy and Nixon back in those years, they were sitting at a card table, and they got up to the podium one at a time and talked. Now, I mean, this is a bigger circus than the Super Bowl. So it's going to be, they're putting a lot of pressure on everybody. So, and no matter what will happen, the week later, everybody will forget and they'll go on doing what they're doing. So it's just a way of the networks to make a few bucks. And boy, it's going to be more than a few bucks this year. That's for sure. Now let's quickly take a look here at the silver market, because here again, we're seeing a market that really wants to try to get above these levels here that we've been watching. And you'll see here that we're still having some trouble here at this 1977 level in the silver market. If we can get silver above 2062, about $1 a barrel higher than $1 an ounce higher than where we are right now, I think we've got a pretty good chance to see silver, take off. And we do, they've tried this before and they failed each time. Now, if we look at platinum, the platinum is not nearly as strong. And, platinum is an industrial metal that is also happens to be a jewelry precious metal. You'll notice that it is lagging quite a bit. We did stop at the 78% retracement down here the other day, which was equivalent to what we were looking at in the gold at 1309, but it hasn't moved very much, as of yet. So we watch this with a great deal of interest to see if we get these breakouts, because if we do get a breakout, it's going to be I think it's going to be a very, very sustained move here in both gold and silver. We can do it. Folks, whenever a market runs that far, like we did in silver and gold, we ran, $300 an ounce in silver or gold, and we rallied, $6 an ounce in silver. And whenever that happens, and then you don't back off very much, that's telling you that there's a lot of buying in this market, because usually when the market will top like that, it'll give 61% of it back very quickly, and we can only make a 38% retracement off of the lows of April, May. And those were 38% retracements. So all of that is telling you that there's a really strong bias right here in the gold and the silver. We've been saying that for quite some time, to watch for $11 pullbacks in the gold market. That's exactly what we had this last time. So just keep an eye on it, because it's got a chance, for some really big moves, to the upside. It's a key to be watching. Now, one of the things that we have to cover here when we come back from the break is we need to look at the notes and bonds, because they are looking at some really serious things to be watching. Also, what I forgot to do? Shut the front door and raise the rent. I forgot to bring up the German DAX, because I like to start the show every day with the German DAX. And as you can see, what happened, on Thursday and Friday, we were making that beautiful 78% retracement up there at the 10,679. That was a perfect ABCD pattern over the past 5 days. And of course, we were down on Friday. And as you can see, we gapped down today and are approaching the 61% retracement down here at 10,400. Now, the reason why this is down today is because of Deutsche Bank being down 6% pre-market, because there's a lot of news out on Deutsche Bank. It's making all-time lows in here in Deutsche Bank, and as I mentioned before, if we go below $11 in the Deutsche Bank, you're going to have some really really interesting phenomenon to the downside. I think it'll look like Lehman Brothers. And if you'll remember, Lehman Brothers was the largest U.S. bankruptcy in history, and we don't want to see that happen again. I do not believe that they're going to let the Deutsche Bank go under. I mean, if it gets down to $2 a share, like look at AIG. It got all the way down to 56 cents a share. Then they did a reverse split, and it still hasn't rallied very much. But that went from 72 to 56 cents. So just keep in mind that these stocks can look at Kodak. I mean, in Polaroid. I mean, so many of these companies that just never made it. WorldCom was another one. Enron was another one. Of course, Enron was a scam. But anyway, we'll watch that to see how these things go. But we will be watching these very, very closely for sure, especially $11 in the Deutsche Bank. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here at sugar. Someone's asked us to take a look at sugar and also coffee, but we'll do sugar first. As you can see here, we had a huge gap up at the 1.618 number. That was absolutely spot on. And then we had the big reversal. It dropped almost $2,000 a contract in one day, and it left this monster shooting star pattern. Now, candles are very good. They're especially visual that you like to see because they're wider and you can see them a little clearer than you can do a regular bar chart. I particularly like candles because they're simple and you can change the colors and stuff, which makes it a little bit more interesting sometimes. But it shows you the relationship to the opening price, which is what we believe is one of the more important things to look at. So keep an eye on sugar here. We stood short to move. Now, this should be a major top. We should see at least a 30% drop, 25 to 30% drop in sugar from these levels. But if we go back above that line today, you'll be looking at something that will be, very, very, very disastrous, on the downside. So keep an eye on that if we get to this level. We'll follow it little by little. I don't trade sugar anymore. I think I might do one trade a year in sugar, but that's really all that all I ever do is to look at. Hold on one second, folks. I've got to turn off my limit minder because we've just hit a 61% retracement in the German DAX at 14,000. So this will be an interesting number to watch. We're down a little bit here in stocks, down 100 or so in the Dow, but still a little bit quiet, I guess, from that point of view. Now, before we get to the coffee, we really need to take a quick look here at the E-mini S&P so we can see what we're looking at here. As you can see, you can't see it yet, but you will soon. You'll notice that on Friday we came down to a 38% retracement right before the close, and then we started to move down lower last night. We got all the way down here to the 2145 level, 2143, which is a 61% retracement. Anything below 2131 would tell us that we formed a major ABCD pattern here over the past several weeks where we went from 2191, we dropped 90 handles down to 2100. So if you take the high that we made at 2173 and you subtract 90 from that, the ABCD pattern will take you to 1982. And that was a very important year in the stock market because on August the 9th, 1982, we made a major bottom. That was the bottom from the high from January of 1970. The market had been in a 12-year trading range up until that time, and we changed that on August the 9th, 1982. That was the start of the move up in bonds. They had topped, or they had already turned about 6 months previously, but they really started to move up rapidly on August the 9th of 1982, and they kept going higher over the next few years. Let's try the next 34 years. But we should have some problems here in some of these, and we'll be able to see, what's going on with a few of these things. Now, I wanted to take a look at coffee because someone gave me a request. There's another one that I don't trade. I do look at it once in a while, but it's a very tradable commodity. It's just that I had bad experience 40 years ago, and I decided I didn't need coffee, cocoa, and sugar and orange juice ever again, and I've never traded them. And believe it or not, boys and girls, I don't even miss it. My grandma, when she was teaching me to trade when I was 4 years old, sitting in the little high chair there, she's feeding me oatmeal. She said, now remember, every time you have the urge to trade coffee or sugar or cocoa, go lay down on the couch until the urge goes away. And that's what I do. But they act technically very well, and they're much better now than they were 40 years ago because we have electronic trading. They can't pull the shenanigans that they could in the coffee and cocoa pits. And what would happen is the markets would get real active, and there weren't enough trader or people holding decks in there to fill all the orders like there were in the other pits. And so you would get a horrible fill because by the time he got your order for a buy stop, the market could be 10 cents away. It was that crazy. But it's not that way anymore. So these are tradable, and you might want to take a look at them because they do follow the numbers. As you can see here on the coffee, we made a 135 pattern just absolutely perfectly back there between January and March, and then we made the ABCDs with a final 1.27 up here at the 160 level in the coffee. Now let's switch our put this over here. We'll switch our let's get my words together here, Larry. We will switch our focus to the Treasury bond market, and as you can see here, we've had a pretty good bounce here in bonds over the past several weeks. You can see that 382 level, but that's not the important one to look at, because the Treasury notes, which is so much bigger than the Treasury bonds, show a totally different picture. And if you'll take a quick look at this one, you'll notice that this is making a beautiful ABCD structure inside that little red box. I highlighted that because you can't see the ABCD pattern very clearly unless you highlight it like this, and that's what I did. And if you'll notice that if you go back and look at the last time the market rallied, it rallied the exact same amount that it did before of what we were looking at. Hold on just a second here. Didn't want to see that come up yet. Just a second here. Give me 1 second here. I'm watching something very, very closely, and I wanted to see what happens. Okay. All right. Let me turn this off, and we'll be in good shape here. Okay, we're trading it down. We're 21.43 now in the S&P. We're, like we mentioned, the target on this ABCD swing would take us down to 1982 if we measure the distances between both ABCDs. That's what we'll be watching. But hey, folks, when I'm doing this, realize that I'm just looking at patterns. There's not any fundamentals. If you like fundamentals, you have to do some of your own work or listen to other people that look at supply demand statistics. But all we do is we do pattern recognition. Our theory is that the numbers that we're looking at will be focused on what the chart is doing. In other words, if there's more buyers, prices will be going higher. And if there's more sellers, prices will be going lower. That's the whole theory. And I've always believed in it because I know that they give us bad information, pray tell. You can see that from Fox or CNN or anybody. They're always saying one thing and maybe it's the exact opposite. Who knows? But with the charts, they can lie to you, they can give you misinformation, but they can't hide from you. And that's the main thing, to keep in mind. But that's what's going on. Oh, by the way, I was thinking of John Logan when he was on this morning. I noticed that Elizabeth Warren was grilling the CEO, John Stump from Wells Fargo on Friday, and she asked if he had given back any of the $200 million that he had made during the time this scam was going on. And he wouldn't answer the question, and she finally said, I will take that as a no. 877-927-6648.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back, folks, and I've had a request to talk to a little bit about how the markets respond, to the political environment. If you remember back in 2008, we were having our first change possibly in leadership, going from, Democrats or Republicans to Democrats. We were first also having our first African-American president, potentially. And, he was a big underdog at that time. And then you'll see that things changed. The market broke very, very badly. And they blamed it, of course, on the Republicans. And who it was, no one knows who's to blame for it, but it was basically the banks were over-leveraged and they had done a really bad number on the real estate. But these are things that, believe me, folks, what's happening to Deutsche Bank would make the real estate market look like a blip on the charts, because if some of these counterparty trades do not materialize, it affects the assets. In other words, one bank that is short these things has made a lot of money, and the banks that are long are losing. But if the long side will not take the responsibility, in other words, they go bankrupt, they don't get the money. That's the bad thing, unless you're one of the lucky people to cash out before the bankruptcy. So you'll be able to see. Someone's asked a question about 1982. Whether 1982 will hold in the S&P or not, I'm not really sure. But folks, realize how quickly we've come down from the high. We're almost 100 handles lower in the NASDAQ already, and it's only been 2 days. And we certainly got enough news out there, and with all the things that happen in the world, that not that the news makes a lot of difference. I think it's based on the cycles. But you want to look at it. I really believe, folks, really strongly, that you need to follow what's happening with Deutsche Bank, because the Deutsche Bank is an outlier event. That's very similar to what happened to Lehman Brothers. I was very, very strong back in that era. I wasn't on live at that time I was too. Yeah, I was. I was doing only 1 day a week, as I recall, for Tom, and then I started doing the commodity show a little bit later. But it was a black swan event, and the reason why is because Lehman Brothers was so involved with everything. The key to Lehman Brothers is it was making an incredible 3 drive to a bottom pattern at a 1.618 expansion at 19. That was down from $100 and some, and it was still, maybe down only 70%. I don't remember the exact retracement number, but the daily pattern was a perfect 3 drive pattern at $19 a share. And I was looking at that and I said, look, buy a call on this, or buy it at 19 and put a stop at 18. And believe me, it hit 19 and it rallied to like 20 and a half. And this is in like hours now. We're talking hours here. So it rallied like 5%, went up to about 20 and a half. And before you could even blink an eye, it was trading at 1850 and it never looked back. It was just straight down. I mean, there was just, once the shark smelled blood in the water, it was over. And that's what will happen with Deutsche Bank too. They don't take any prisoners. As you know, there's no love lost on these things. And believe me, the problem is the counterparty risk. And, that's where the real problem could happen. But as we know, no banks are too big to fail and will always be able, to bail them out. What I wonder is, where's the next $4 trillion going to come from? Is the Federal Reserve going to print another $4 trillion? I guess so, but if that's the case, then we're going to be looking at something that happened to the Germans in the 1930s when the paper money was absolutely no good at all. That's why you've got to watch the gold, and you've got to watch the silver. You've got to watch the currencies, because the currencies are really going to be the ones that tell you when things get really bad, because if the spreads on the currencies start to move out, they usually trade 1 or 2 pips. But if they start to move 15, 20, or even more, this is telling you that we got, some real serious stuff happening. I don't know if it's going to happen or not, but, when you got that's the biggest bank in Europe. It's the flagship of Germany, folks. That's, that's a big bank. And, we'll see what's going to happen. But you got to pay attention to it, in my opinion. I watch it each day. I have friends in Germany that, send me the skinny on what the stock is doing and any news items on what the banks are trying to do to prop it up or something like that. And the latest thing today, of course, is that Angela Merkel was not going to save the bank. Well, she says that now, but it gets down to 7 or 6 or 5, there'll be a different story, believe me, because there's a lot of people that own the stock in the bank, plus there's a lot of people who have their money in there, and that's the main thing that you got to remember. Remember the works of Bernard Baruch. Don't be concerned on the return on your money. Be concerned on the return of your money. During the bad depression, during the 30s, my grandfather went into the bank in Indiana, and he had like $1,500, which was all of the money in the family. And he went into the bank, and the banker says, "We just don't have any money to give you." And my grandfather made him an offer he couldn't refuse. And he got his money and left. But that's the way it goes. And, you just never know what's going to happen with some of these things, because, what they tell us and what they're doing are two different things many times. You've got to remember that. Just look at what happened with a bank like, Wells Fargo, and you're only talking about $200 million here, folks. What about the J.P. Morgan with $40 billion in fines? That means they did something wrong. They broke the law. Shut the front door and raise the rent. It's just not a big thing. So we'll see what's going on. So it looks like we made some type of a little bottom here in the market. We rallied a couple points in the S&P. It's still not much of a bounce, but at least it's bouncing a little bit. So watch it very, very closely. The one that I'm watching, of course, is to see if we can get gold above this 1360 level, because to me that would be a valid breakout, and it would tell us that we're most probably getting ready to have a tremendous move, to the positive side, and that would make it a really big move to the upside. That target on that goes to 1475, by the way, the ABCD target that we looked at when we were watching the charts early this morning. So we want to watch it very, very closely here to see what's going on. Okay, we got a caller from Texas, Dallas,
Good
Texas.
morning.
Mike, how are you?
Yes, I'm doing great. Listen, you had mentioned Deutsche Bank and so forth, and Merkel. Is there a deposit insurance in Germany for depositors of banks that may fail, or this sort of thing?
Very, very, very good question. Now, I had two of my students from Germany ask me about that a couple weeks ago when we were first looking at Deutsche Bank, and their parents had a great deal of money in the bank. And I told them, I said, split it up. I mean, just leave a little bit in one bank and go to some smaller banks. But I never asked that question if there was insurance. I will get that answer, and I'll report on that tomorrow. Because as soon as we're done with the show here, I'll just Skype them because they're active traders, and I'll know they'll be on the line, and I'll get that answer. In fact, I'll try to maybe on the next show either with Tom or Basil to let you know that that's it. But remember, insurance is only as good as the person behind the insurance, Mike.
Well, that's true. That's true. Yeah. But it anyway, I was just going to find out.
Thank you very much. I'll get your answer, buddy. Thank you very much.
Bye-bye.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and the flag is up. We've got the market moving to the downside here in the stocks, which is not unexpected because Dow was down over 100 points pre-market. A lot of that was based on the combination of the Nikkei down about 1.5%, but then it all began to start rapidly, of course, when the German DAX started to fall apart because of the fact of where we were with the price of Deutsche Bank, and like we mentioned many times, that's it. But our previous caller, Mike from Dallas, made a really good point in how much is the insurance, and we have supposedly catastrophic insurance here, but believe it or not, I don't think that would mean very much if something bad would really happen. But, who knows? All I know is that too big to fail was not a very good idea, much like quantitative. In fact, the quantitative easing is a lot worse than the too big to fail, folks, because what they've done with quantitative easing is they've screwed up the regular 4.5-year business cycle where we used to go, up and down every 4.5 years. They've actually skewed that cycle, and it's not nice to mess with Mother Nature. And this is where the problem's going to lie. And I believe lending money at negative interest rates is never going to work. But we'll let the markets determine whether that's going to be the case tonight, and we'll see what's happening. One other piece of advice: don't get too excited about whatever happens in the debate today, because that'll only last for a few days, and we'll be back to business as usual. So just be prepared, for the unexpected, and you'll be okay. So remember, all of our frustrations in life comes from unfulfilled expectations, whether it's our children, our job, our spouse, whatever it is. Don't expect too much, and then you'll be just fine. But you got to think positive. That's the main thing. But let your expectations come as they may, and don't worry about your fear, because fear is something that just doesn't materialize. They prove this psychologically over and over again, that 85 to 90% of your fears never happen. 877-927-6648. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.